And welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this cold Monday afternoon. I hope you all had a great weekend and a great Christmas time. This is the second to last stream we have this year, so there's one more stream tomorrow, and then there's actually a holiday, so exchanges are closed on the 1st. And yeah, so before we jump into the markets and my portfolio, as always, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so the broker, the charting software, the strategy I'm following, and so on, are linked in the video description down below. And the one thing you truly should do, maybe as your New Year's resolution, is check out the Elliott Wave principle, which you can read online for free when you use the link that's in the description down below. With that said, so there might be a little bit more background noise because I'm in the progress of finishing up the new NAS build, and the case is not fully closed right now because I'm still missing in a few parts, and it's busy doing some data checking on the hard drives. So sorry for that, but other than that, let's jump into the portfolio. We have a slightly, like a more or less break-even start with a slight red taint into the new trading day. Our biggest position is obviously still unchanged, the 600 GameStop shares, against which we have our 6 covered calls sold at a 30 strike price. Obviously, the big question now here is, will this turn out to be part of a corrective pattern? Will we get to see a downward move here, which would be in favor for my calls? Or is this indeed some form of 1, 2, 3, 4, 5 for the next upwards move? There is still the option, so for me to roll out those calls, although we'll have to wait 3 minutes for the markets to officially open to see option premiums. So the way things stand now, if we would stay here until the 17th of January, so that's another 18 or 19 days, depending on how you count, my shares would get called away at 30. However, we received $480 per 100 shares in premium, which means we actually just start missing out on profit if we go above 30 for 80. There is, however, I said, still the option that, while I will not close out that option, because obviously it would mean, right now it shows that I could realize $300 out of the 2,800 premium, which is way too little to even consider that, especially when I consider that there is an option for it to decline. But I could obviously potentially roll it to a future expiration date. So which means then I, at least for now, remove the risk and potentially also to a higher strike price. It all comes down to how much the price for these options changes in comparison to how much we would get for options that are further on a higher expiration and further out. So how much time do we have to give up and so on. If I'm proven wrong, in quotes, so if we see further upside here, which means we would have to break the 34.98 or let's say 35, then we would potentially look into rolling them out, because it would mean we could realize additional profit. So instead of missing out above the 34.80, we would basically be willing to sacrifice some money to get rid of this expiration date, basically, and at the same time buy us more time, but also roll them to a higher strike price. So, or we'll get them called away. I've had them down for, in quotes, so long. To be fair, honestly, those shares we haven't even held that long. But yeah, I still got a little bit attached to them. Anyway, so GameStop was unchanged. Long-term bullish, short-term, as said, is a different story. Where would, by the way, our minimum targets be for let's check that. So if wave 4 is finished down here for some reason, so that would be wave 4. then we actually would already hit our minimum target for wave 5, and visually we also would have what appears to be 1, 2, 3, 4, 5 in there. So they are like, although I'm not happy then with that candle here, because here we first went lower and then higher, so it's not really a great way of labeling. So, but technically we already hit the wave 5 minimum target if that would be 1, 2, 3, 4, and 5. Yeah, we'll have to consider that option as well. As said, for now, I have my hope still that this is actually some kind of flat correction that will still retrace further down. For our options, is set to expire worthless, or the ones that we wrote to expire worthless, which means we just pocket the premium and we get to sell new options. Anyway, moving on. Yeah, BNet unchanged. It's going to take, we're on a 12-hour time frame here. It's going to take, I don't know, a week or two for us to confirm that either we're still going further up here or I messed something up with the labeling. Overall, I'm still bullish on that the labeling up till this point is, in my opinion, super clear. And there are just so many things that fit perfectly. But obviously, labeling this here is a little bit more challenging or a little harder. It could be that we're looking at a diagonal here, 1, 2, 3, 4, 5, or 1, 2, 3, 4, and 5. Then we are currently correcting this entire diagonal, so there would be a little bit more downside possible. And then we go further up, but I'm not 100% sure about that part yet. So, but overall, I stay bullish. We'll hold on to our shares, even though they are right now plus minus, yeah, break even. So. Yeah, markets are open. We have GameStop Premium. So just to show you what I mean. So if we check for the $30 calls, January 17, if we were to say we buy those back, and on the other hand, for example, we go February 21st. So here we have around $420 or $410 premium. So if we say we go out for a month, we could theoretically, for the same price, get at least the $35. So you see, we would still get a small credit of $60 per option. So we would get $300 credit. But it also would mean that if GameStop rallies up, we also realize $3,000 in extra profit. So that would be at least right now. Obviously, premiums change depending on volatility, time that's left, current price, and a bunch of other things. So market expectations in many ways. So while, yeah, I don't want to do that right now because it seems like it's too much. Now, right now to the 17th, we have still 18 days left for the options to expire. And if we go anywhere closer, so if we go, for example, only a week out, we can see that it turns into a debit. So we would have to go closer, like the 32s maybe, or they are even already a debit. Yeah. Maybe 31 might turn. Yeah. So we could only realize $600 more in profit if GameStop rallies up or stays above 31. If we roll it like this, and that's already basically going. So that's by 1 week. If we go by 2 weeks, we might make it to 32, yeah, maybe even 32.50 or 33. Let's try 33. There we don't get a price, okay, 32.50. Yeah, there we still make a small profit, so 33.50 would be debit, plus minus 0, yeah. So we could theoretically for free roll them out, or I mean, it would cost us a little bit, but almost for free roll them out to $33.50. Which is out of the money, but it also adds a month in time, yeah. So, or it adds 2 weeks in time that we have to be right. So, I don't know. I mean, if you wanna, yeah, not chip in, but jump in and share your idea or your opinion. So, like, we're circling back here since we're looking at the option premium. So again, I believe it's possible that we'll get another wave down. Whereas if I roll them now, I might get the higher premium for the new calls, but I also have to pay more to close mine out, which means if we go down, I think it's unlikely. So if we indeed start a downwards movement, I think it's unlikely. Oh, sorry guys. to recover above 30 before the 17th, which means I could pocket the full premium and then just wait for an upwards move, or just accept for a change lower premium, and by definition or by default already write calls at a higher strike price. Whereas if we go further up, then on one hand, my calls become more expensive to buy back, but also the calls to roll become more expensive. And I think the biggest move would be to even, I don't know, like take leaps. So next year, January, for example, where we theoretically could roll them. So if we remove that second leg, I could theoretically roll them to a 125 strike price. I mean, that would be obviously, yeah, I mean, wouldn't say insane. So we would pocket $600, but those $600 would be for an entire year, and which is not a great return on the investment. So it's like 3%. However, it also means if GameStop then rallies up, we would potentially profit up to $125 per share. So for that, obviously, GameStop would have to make like 400% or so, and stay above that price, because as it goes up, I mean, or we benefit from theta decay and close out the trade before that. So I'm really like, yeah, or so I said, I mean, the extreme version would even be to go even further, although that the strike price is not as high. So you add a year on, and you don't necessarily get much more. So if we add a year on, then those don't exist. Yeah, so but you can see that up, not buy, but sell. So you can see that would be like $4,000 in credit for a year, so around 20% return, a little bit more than 20% return. And we roll them to 65, but it also means that our funds are tied up, and the only thing we have to play with are the credits that we get here, so 675. And we really don't have any options to roll it further then. So if that option then becomes more expensive and we want to close it out, yeah, there's no further expiration and no higher strike price. So although by the time we get there, there will be higher strike or further expiration dates. Yeah. So I'm really not that sure. I mean, either way, if they expire, we can write cash secured puts. If they were to expire in the money, and depending on where we are, we could make in a week maybe not, but let's see. Let's check here. Yeah, so we could make like $500-600 in a week. So which is still what's that, 2%? Yeah, 2% or so. Which definitely isn't too bad, especially for a week. So it's a nice problem to have, because we are in profit. We got our shares assigned at 30, but before that we already made thousands in premium. We literally, with that premium, so originally we had 10,500 or 10,800 euro in the account. Now we have almost 19,000 plus another 100 shares that are already transferred to computer share from all these shares that we got since I switched to Interactive Broker in the middle of May. So our shares, while they show an average of 2450, based on getting them assigned at 30, but with 600 premium that we pocketed, and then manually buying a few more to get the remaining 100 shares and so on. If we consider all the premium, we actually paid less. And so overall, if they get called away at 30, we still look at a decent profit, and it frees up the entire capital, so $18,000 to do with what we do with, however we please. So to write new cash secured puts, or maybe start trading something else or so. Obviously, I see more upside. The big question, however, would be how to best monetize this. I consider there is the possibility of a downturn, either like this, or this is already 1, 2, 3, 4, 5 finished, and we get a correction based on this. Obviously, it could be that we go a little higher here and then we correct this entire move. So there are a bunch of things on the chart where obviously upwards movement means it's bad for our current calls, but if we roll to later and higher strike prices, it's actually not too bad. I think we're gonna roll in quotes last minute, although right now it becomes more expensive for us to roll later because right now the market still considers the option that there will be a retracement. So if we look just at the January 17 options, you see that if we look at now, that the curve looks like this, which means the options are not as expensive. So, I mean, our profit is also not that high, and it would only be capped if we go that high, because then basically the price for the options, blah, 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 and whatnot, yeah. Whereas if we, I don't like that. Yeah. So I just saw another chart on the other page. Yeah. Whereas if we wait till expiration, actually bring that back so we drive that point home. So if we wait till expiration, we can see we have a solid point at 30 where we start to miss out on profit theoretically. Yeah. So because our shares will get called away at 30, and that's where we realize in quotes the maximum profit of our shares. And we still pocket at the premium of the $2,880. So yeah. Yeah, honestly not sure. I guess we'll just keep an eye on it and wait. Yeah. Now we're gonna check Bitcoin. Bitcoin is not doing what I wanted to do. We now broke the level here, which is quite nonsensical. I don't see a 5-wave move here, so I'm having really trouble labeling this. I do, however, see a 5-wave, 3-wave, so there's more downside now in Bitcoin. There's potentially wave A, wave B, and now wave C. So Bitcoin might see 85,000 again. Where do you come from? That would mean we're retracing the whole bigger picture here, or at least from down here. And if that's the, now it's loading. Okay, sorry for scrolling too far. If we're retracing that, the 85,000 mark would also be the 38.2 retracement. So I think from the looks of it, that is something. Maybe this spike here is a fluke, but it happened. I see it on multiple sources. So because this would make this 1, 2, 3, 4, maybe 5 to finish a last wave. Whereas that spike down here makes this a flat correction, 5 waves, 3 waves, 5 waves, yeah. So that is definitely a corrective pattern. So, but from the looks of this right now, and especially because here we already went lower than here, this looks like potentially, I said potentially 5 waves, A, B, C for 3 waves, where again we have 3 waves here, 1, 2, 3, 4, 5 here. So that part here we would have to label closer, but doesn't matter. So it's most likely also 5 waves, 3 waves, 5 waves. So Bitcoin probably going to 90 to 85 to 90,000. Could potentially also go lower, but that's what's in the cards right now. So we'll keep only that on the chart right now. We're gonna keep our position open, and yeah, if it happens, we're gonna then average down. XYO has the low potential here, but I don't want to switch. The risk reward is just here we're instantly risking 20 or more % if we're wrong, whereas in Bitcoin our risk is simply lower. We might now be at -2, -3% since we entered around here, and even down here we're looking at a -10% risk. And yeah, while the gains in Bitcoin are not as high as in some altcoins, it's also less risky. However, our storage position, yeah, still unchanged, should go up. And algo, theoretically, it could be done with the correction here, or This is only 1, 2, 3, 4, 5, A, B, C, and we go down further here, but then there should be another wave up, so we will not change our algo holdings either. So many things that don't move the way I would like them to, yeah. Yeah, I mean, it would be tempting to just, I know I keep circling back to GameStop here, but and today I actually have more time for the stream because I somehow am not in the focused mood to get a lot of other things done. The most extreme thing I could do would be a set to sell the, what's there? There's like 1,000, yeah. Sell those. So we get $630 in credit times 6. So my head is obviously not mathing. 626 times 6. 626 times 6. So we would get almost $4,000 in credit. But then up till 27, those $4,000 would be everything I have available for trading. Although those $4,000 I could use to buy another 100 shares. But that doesn't help me. It only helps me if GameStop goes down or over time stays below 65. Oh. And $4,000 would be 20% roughly for 2 years. So on the other hand, if we go for January 16, if we were to sell those here, then we basically lock in another $6,000 of potential profit if GameStop makes it above 40. But we also get, again, around 3,500. So technically we could buy those 6 back, but sell 7 of those because we could use the money to buy another 100 shares, which we would ideally do with cash secured puts to even pocket more premium. So that if that's 1 and that's 1, then 1, not 7, 1. So that would be the maximum if we roll it for next year's January calls, so for 30, which obviously doesn't increase our profit, but it means we would get $840 per option, but it's for another entire year. So that's almost 5,000. So 841 since we account for the fee, so it's pretty much exactly $5,000. For $5,000, we could sell 2 cash secured puts at 25, unfortunately only, yeah, or maybe. So if we go for this week's expiration, it's probably not that nice. Yeah, I mean, there's no premium. If we go for January 17th, also not that much. How far would we have to go out to actually get? Oh no, we could sell the, if we get $500 in premium, so that would be the crucial mark. So here it would need to say 5. So we could sell, but that's again for half a year, yeah. And then we're just locked in, and now, yeah. It's been easy so far because while there were times where, now again I'm in Novavax here, but there were times where GameStop moved like low and sideways, so we just pocketed $50, $60, $170 in premium. But now that we're actually in the situation where our shares might get called away, it just becomes harder to decide what's the best play here. I mean, just from a premium perspective, obviously it would be to how much can we get there? Like, just out of curiosity. Yeah. So if we close out our current calls and instead go for, hell, we can even go for lower ones. We could even go for the 24. They should already, how much is the premium difference here between, oh, it's only $100 difference. No, nope, nope. So we could go, so if we basically lock in our shares for that long, we would pocket another 7,000 or 6,600, which we could use to, but we couldn't roll them anywhere. That's the bigger issue here. So there would be no wiggle room. And obviously, if GameStop rallies up, we would not be able to lock in quotes, an additional profit by rolling the option higher for credit. How much? What's the lowest option here? $3. So that's kind of like 28. So it's like, yeah, that doesn't bode very well. Or actually 29.50. Yeah, still missing out. Okay. We just go for a year. Premium is not much worse. I wonder if that's the play to make, but I mean, it would offer a decent return, but it would also mean there's nothing to do then for the rest of the year. So if I, or more or less, if I were to do that, we'd pocket 850, 851 times 6. So $5,000. So, yeah, more than 20% for a year, which is probably beating the markets. I mean, that's considering that GameStop shares don't plummet. Yeah. And it's almost enough to write 2 cash secured puts, or at least at the 25, maybe a little higher if we consider the premium strike price. So to get us a potential 200 extra shares if GameStop goes down, which I don't expect, or other than that, just pocket a little bit, but it's too long. It's just too long, yeah. So, and if we, because then there's nothing to do. So technically doing that on a weekly basis would be the best thing, but right now our options are in the money. So, and we're already on January 17th, so which obviously means if we go closer, they get cheaper. So there we would have to roll them lower to actually get into credit, which is something we definitely don't want. And we basically would need a spot where we get more than 4.81. Yeah. So while still rolling them higher. So which the earliest possible way to do that would be for the January 31st, where we could roll them higher, and we can see that we potentially might. So 30. If we roll them here, for example, I mean, there we're actually, yeah, so we're looking for, now come on, close that. There we look at a small credit, so we could instead go, so you could, for example, roll to 33, January 31st, which is currently out of the money, but not by much if we rally further up. So, and then we're in the same spot again. Although there is more time for theta decay. And it depends further on the volatility. That's kind of like an issue to consider. Yeah. So if we start moving sideways, or yeah, like sideways, options are gonna become cheaper if we don't have a higher implied volatility here. And then we'll have to roll them further out if we want to hold on to them. On the other hand, if we really get the price to shoot, or if it really shoots up further and volatility increases, then it actually becomes cheaper for us to, or not cheaper, but we actually make way more money by rolling them out. No, that doesn't change because we still have to buy them back. So while this is what we paid for them, if the volatility increases, they also become more expensive. Although thanks to the shorter time left, yeah, their break-even price for us would be $34.80. So as long as they stay below $34.80, we can, especially up until expiration, we should be able to roll them out for a credit, and actually without making a loss on that trade. It just means, it just would mean we give some of the premium back, but not all. Like right now, if we would close them out, we still would retain $300 from those options, which we can see visualized here, because we would actually get less for the new ones than what we have to pay for closing them out. But because we sold them more expensive, we actually still would look at a small credit, plus minus zero in that case, yeah. But doing that right now makes no sense, because if we are to go up, we're also going to go above 33, so it doesn't save us anything other than buying us a little bit time till here. And if we are to go down, then anyway, we should be able to get a better deal. So yeah, like, I mean, I know, long story short, back and forth and whatnot, yeah. So as much as I keep going over this, I think the situation just means wait. Obviously, whoever bought the calls from us could exercise them at any time, which removes the decision from our plate, but gives us the chance to just sell cash secured puts again. Maybe not weekly, but already longer out. So like, for example, yeah, I mean, there also wouldn't want to go too much out, like maximum, let's say 60 days. Yeah, like this. There we would also already get a couple $100, $400 times 6. So almost 3,000 for 2 months. Not too bad. So 20%. If the shares get called away, and if they don't get called away until expiration, we still can, even in quotes, not last minute, but almost last minute, decide to just roll them out for credit. But we probably will only do that if we can do it. So if then I mean, the curve obviously gets slightly steeper as we approach. So even staying at the same price level, we can see right now it's like this. But if we were to stay so if we stagnate and move sideways, then it just becomes more expensive for us to roll them out, even though we have on one hand beta decay. The only option would be if volatility decreases. It would need to increase in our favor, because then if volatility increases, then options become more expensive. But then buying them back for us also becomes more expensive. Yeah, something isn't mathing right now. But yeah, anyway, let's move on. So GameStop will just keep an eye on. Again, I believe there is a push down that's still to come. Either this is a flat correction and we see a wave C, or this is already the 5th wave finished and we see a wave, whatever, 2. Yeah, so short term, I still believe there is downside. And then after January 17th, I believe there might be the upside to come. So we're gonna see if we can wait this out. With some luck, in quotes, it will play out like this. And even if we don't have that much luck in that situation, we can still simply look into our options to roll the calls further out for higher strike prices, if we want to keep the shares. Yeah, so that's the one thing. Yeah. Yeah, our other positions, nothing changed. So immersion should go further up. Cost should eventually, or did it now? Yeah, like came very close to breaking the top that we're waiting for. So we're still moving in that sideways narrow channel. We're waiting for the break. NEO should go further up. How many shares do we have in NEO now, by the way? There we have 100, yeah. So, and there is, the other problem is my profit target is 670, so, and which means, or the minimum profit target, and maximum is like 9, so we would need to look at the 9 call. We set vertical spacing, and that was in August, so 4 months. So by March, I don't think it will go that fast, but April or March, there are no, okay. So NEO, let's say April. Yeah, there's just next to no premium. I mean, although we could still get around $17. 6, where we are now at 4. 6 would be, okay, 7 would be the ones we can sell. Okay, so 7, but that's too far. And if we do that weekly, there is no premium. January 17th, no premium. February. Okay, let's say April. Okay, for $30 credit. And our average for NEO is at 450, so we still would realize a decent profit. Okay, so we're gonna sell one April 17th, 7 strike price, yes.
Order filled.
There we go. We can also, for a change again, close our currencies.
Order partially filled.
So, yep.
Order filled.
And COS we also have, but COS has no options, and Greenwave also has no options. SunPower is broke. So in immersion, we don't have the shares that we would need to do that unless we kind of like take 50% risk. Although it would work if we sell at a $20 strike. So if we sell, no, the call price increases. Yeah, we still make profit on our shares, yeah, so. So if we, oh God, my brain today is really not mathing. Let's run the numbers here. So immersion, build, covered call, immersion. And now, however, let's say we only have 50 shares because that's what we have, and we have them with an average of 985. Okay, so if we were to, okay, there is no, February would have 20, yeah. So our curve would look like this. So for February, oh, January 17th would even be the biggest payoff. Okay, so, but there should be table. No, graph. Okay, I'm not grasping things today, yeah. So, oh, that's only 1750, and no volume, so we don't know. There obviously, we don't see it visualized here, but there obviously should be a point at 20 where then the curve turns around, because then we only have 50 shares, but we owe 100. And yeah, so probably not a smart play, and would just risk. But we should stock up on shares the next chance we get, yeah. So which obviously would be, here we would need what, like $500 to get the remaining 50 shares. And BNet also would have options. So if we realize another $1,000 in premium, we can basically stock up here to 100 and 100, and write covered calls there as well that are not too bad, at least what from the side it looks at, although the open interest is not that high on some of the strikes. So yeah, but I feel today, like, as much as I would have loved to dive into more, I think we're not getting in the right direction today. So nothing's really 100% clear. And the one big position, so GameStop, that we'll have to see how it pays out, or not plays out. There I'm just indecisive if I want to roll it out now and how far. As said, so we have January 17th, that would be the 30 calls that we would have to buy back. And on the other hand, then how far would we go? Yeah, so 100 days seems too long. March, February, okay, so. But we are currently trading at 32, so we would need to, we roll to 35, yeah. We get $600 that we could use to get the shares in Immersion or Barnes & Nobles. But we'll add another more than a month to wait for this play to finish, yeah. So whereas again, if we don't have to buy those back because maybe it plays out the way I think it should, then we're not getting $600, but we can then make write other call options that potentially give us a small 4-digit amount. So yeah, waiting it is. Yeah. Anyway, as you can see, unfortunately, I'm not 100% focused today. Yeah. So I hope you still were able to take something away from today's stream. If not much, then at least don't forget you can read the Elliott Wave Principle book online for free when you use the link in the description down below. And if you haven't done so, maybe consider making this your New Year's resolution. Start today, so you actually see it through. And with that, I'm actually going to say thanks for stopping by. I hope, as said, you were able to take at least something away from today's stream. Let's actually finish it by asking the Magic 8 Ball. Should I roll my GameStop shares or my GameStop options already today? Should I roll my GameStop options already today? It's on the edge, so it's not showing one answer, but it's literally on the edge. So, and then it flipped to cannot predict now, so we roll it again. Should I roll my GameStop options already today? As I see it, yes. Okay, it's one of the rare times, I think the first time in a long time, where the 8 Ball disagrees with me, but so be it. We'll keep that in mind. If it turns out to be the wrong move, which still means I make a profit, so it's not that it's that bad. We know the 8 Ball told me so. Yeah. Yeah. Thanks for stopping by. Have a great rest of the day. Tomorrow, last stream for the year, so see you then. And yeah, till then, bye-bye.